rather than the traditional market. And I think this kind of transition will require a lot of clarifications from the regulations. And if it is not a must, I think there is a journey for companies or the financial institutions to make changes to switch to using the cryptocurrencies or stablecoin. And the second thing is whether using stablecoin is stable, as we mentioned, the risk and also the challenges of the market.
Right, Lawrence, what do you think? What is Hong Kong's role and advantage in this?
It's a good question. I think echoing what Wayne was saying, the government probably has a strategy
controversial question, but it's good that our speakers are so knowledgeable they can give us some answers. Well, next session is the last session of today, day one of Hong Kong FinTech Week 2023. And we are going to be unblocking the opportunities for an innovation, end-to-end life cycle of innovation. And I want to ask again on stage our moderator, Shane Akeroyd. He is the president of Digital Assets. He will be talking with Kurt Eldridge, Regional Sales Director of Broadridge, together with Georgina Log, Head of Market Development at Hong Kong Monetary Authority, and also again, John O'Neill. He's the Managing Director, Head of Digital Assets, Global Banking and Markets at HSBC. Welcome them on stage.
Great. Our panel actually wanted to take that last question of the previous panel, so that'd be a good place to start. But welcome everybody, and thank you for joining us this afternoon. My name is Shane Akeroyd. I'm president of Digital Asset. We're a technology company. We help our customers build applications on blockchains. And earlier this year, we launched our own chain, Canton, which I know we've heard a lot about today, and I'm sure we will tomorrow. So this afternoon's topic is DLT unlocking opportunities in capital markets, end-to-end life cycle innovation. And what we're going to do, I think, is have a brief linear journey, starting with capital markets origination and new issuance, going through to financing and looking at post-trade services. And so before we get going, let them introduce our panelists. So Georgina.
Hi everyone, I'm Georgina from the Market Development Division of Hong Kong Monetary Authority.
Hi everyone, John O'Neill, I'm Head of Digital Asset Strategy at HSBC.
Good afternoon, Kurt Eldridge. I am Regional Sales Director for Broadridge.
Okay, thank you panelists. So HKMA is our regulator and a globally significant and regional leader when it comes to the issuance of traditional bonds. From a DLT perspective, the HKMA has been leading the way largely through Project Enbridge, a multi-CBDC cross-border payments platform alongside the BIS, the Central Bank of UAE, PBOC and the Bank of Thailand. And of course, we have our Green Bond New Issuance Initiative. And so what I want to do is start with Georgina. Georgina, if you don't mind, let's dig a little bit deeper into what's been done to date from a new issuance perspective by the HKMA as far as DLT is concerned. How does that fit within the HKMA's overall new issuance platform, and why start with green bonds?
Okay, thank you. So the HKMA has been working with the government in various different market initiatives, and green bond is one of them. And when we are thinking about, when we were thinking about doing green bonds issuances, we really wanted to do two things. First is create demonstration effect and raise awareness, and at the same time, we also want to help establish benchmarks for the market. So in terms of the tokenized issuance, which we did last year, how it fits into the whole green bond land program that we're doing. I think for us, when we were thinking about it, it kind of was a natural fit for us being, FinTech and green, both being important policy initiatives in terms of our work in market development. And so we wanted to leverage on the work that we've been doing in green and also green bond issuance to really test out this using this new technology in terms of issuance method. So when we were doing the tokenized bond, what we wanted to do was demonstrate the application of DLT in an actual real capital market transaction, and also through this exercise try to explore the efficiency gains that, and also the transparency, enhanced transparency that this technology can bring. So when we're doing this, we started off with 2 years ago with a concept testing together with BIS Innovation Hub. And building on this study, we started preparing the tokenized government green bond that in the same year, and which we successfully completed it this year. And this was the world's first tokenized government green bond. And by leveraging DLT, we managed to shorten the settlement cycle from the typical T+5 to T+1. And also we managed to test the full suite of lifecycle events on-chain, from primary issuance to settlement of secondary trading and also coupon distribution.
Great. And what's next?
So in terms of what's next, I'm sure some of you might have heard this morning, we announced that we are looking into a second issuance, which through this issuance, again, we're trying to explore some new features that would be useful for market reference. So this time we want to try a fully digitally native issuance. And also at the same time, besides the work that HKMA is doing, we also look forward to, seeing more use cases in the market and the market participants trying out new features, such as how to use using technology to help track do impact reporting and their issuances, and also repo transactions and things like that. And so in August, we also issued a report based on our first experience, and really to share some of our experiences in the first tokenized issuance, and to raise awareness and also serve as a reference for market participants to look at when they want to, when they're thinking about issuing tokenized bonds in Hong Kong.
Right, and we all had dinner last night. Actually, John, you weren't at dinner last night, but the rest of us had dinner last night, and we were talking about repo, very early stage. You're going to hear a little bit more about that in a second. But watch this space as far as Hong Kong's concerned. So, John, over to you now. HSBC, obviously another global leader when it comes to DLT. What I think would be good to do is to actually start very broadly about HSBC's digital strategy. How does tokenized new issuance fit in? And then tell us all a little bit more about, or a little bit about Orion and initiatives that you've done to date.
Yeah, thanks, Shane. And I think those questions very much linked to what Georgina has said already. I think big picture at HSBC, the way we think about this is it's both about transforming existing markets, but also we believe the opportunity to add new products and services into a market environment. And if we think of our overall business footprint, the way we view that, very high level terms, is we deal on our trading floor all the time with a whole set of dematerialized assets, as people might think of them, bonds, equities. And we've built a platform, the one you referred to, Shane, HSBC Orion, which issues and makes available for trading primary, secondary digital assets. And we've started with fixed income. And we think, and the market seems to think, that's the right place to start. But we don't think that's the end of the story. We think lots of other assets in dematerialized form can be created on a platform like Orion, and we're looking into that. But we also see real demand from our customers for tokenizing physical assets, because it's certainly advantageous for some assets to entirely put them on a blockchain, but for some assets like gold or energy, of course, people want the real world physical asset. So we've actually, as one of our announcements in the last couple of days, we've tokenized gold. HSBC is a very big gold custodian. And we've put London Loco Gold, which is the global standard, in a tokenized format on a chain. But that refers back to physical bars in a HSBC warehouse. So that's another example of the kind of developments that we're seeing, and we think there's more to do there. I think it's also obvious that there's a lot to do in custody and other parts of the business. So for us, it's a very broad set of solutions. It's about transforming existing markets, as Georgina said, making them more efficient, principally around settlement cycles. I also think if we make markets more efficient, we're going to see not just the processing advantages, that's important, but not just that. I think what we'll start to see is the way some of those markets work today. We might see significant market structure change, which will be, I think, predominantly for the better. So there's a lot of exciting things to do there. And I think also, Shane, I'm not going to take too much time to say this now, but we might come back to it. I think when we're creating those kind of platforms, as you said on the panel earlier, we observe a number of things that are really important, a number of really important ingredients. The first is law and regulation. And I think many different financial centres are improving and clarifying their law and regulation. I think Hong Kong is in a fantastic position. It starts off with an excellent set of laws, but Hong Kong, as in everywhere, those need to be improved or clarified even further, and there's a lot of work happening on that already, and HSBC is very involved with that. So that's the first theme. I think then it's different forms of digital money. So the last panel was on stablecoins. We could talk about those kind of forms of digital money and whether they're ready for these kind of assets at the moment. But certainly CBDCs are part of the mix. We're very involved with that, and there's all sorts of monetary types. And then the final one, which I think is a real differentiator, is public and private networks. So there's lots of conversations on the panel today about whether you should be using public or private networks. And as I said earlier, if anyone was in the session earlier, we think there's a role for both. We think transactions are predominantly financial market transactions on private networks at the moment, and we've built our system around that approach. But we also have public network connectivity, and that's pretty interesting if we want to bring new products into a market environment. So for me, Shane, those would be the kind of big picture way we see it, and there's loads of lessons in that we could drill down to.
Yeah, and we've touched on one thing. We talked about the HKMA obviously being a global leader when it comes to issuing traditional debt securities, and now a leader when it comes to digital securities. The flip side of that, from a new issuance perspective, is of course the DCM desks at firms including HSBC. So HSBC has a significant business issuing traditional bonds for borrowers including HKMA, but also now is a market leader via the Orion platform for digital bonds. So when you're speaking to your DCM team and your new issue desk, how are you prioritizing which issue comes next?
Yeah, so I think it's, it's a classic answer, Shane, but I think it's the case very much around customer demand. So the digital issuance that Georgina talked about earlier this year is the perfect example. We issue debt with HKMA all the time. Of course, we're always delighted to do that in traditional format. But with that debt, us and a group of other banks working as a syndicate, we're involved in that digital issuance. As you said, Georgina, there's another one on the way, which we're all working on. And it's very much to do with whether the issuer wants to go in a digital format or stick with the traditional format. I'd also say, Shane, just to be really candid, is so far we've seen significant digital issuances, but they're not at huge size. They're not at benchmark size. And that's natural because I think issuers want to see the same level of liquidity in digital issuances as in conventional issuances. And you already referred to it, market developments like repo. We need markets, digital markets, which are as liquid and sophisticated as current markets. And that's where I think it's about working across financial institutions, connecting banks, because no single bank will succeed on this alone and no single issuer will succeed alone.
Yeah, and it's interesting because as a technology vendor, we're having to navigate that. We are speaking to traditional financial markets groups, whether they be borrowers or whether they be DCM desks, and we're also speaking to the digital transformation teams, folks such as yourselves. So yeah. It's kind of an interesting dynamic there, and some firms actually, both at a borrower level and both at a bank level, actually marry the two pretty nicely, and it's a happy coincidence on the stage. We've got a borrower and we've got a bank that actually do a pretty good job of connecting those dots. As you know, not all the firms do. So
yeah, it's a challenge.
That's another good job done in Hong Kong. So with that, I think what we'll do is move downstream a little bit and talk about repo, DLT repo and Broadridge. Broadridge's DLT repo solution is a market-leading initiative and probably one of the best, if not the best, example of DLT in wholesale capital markets operating at scale. So, Kurt, it would be great if you could describe this initiative and let everybody know what is it all about. Maybe talk about some of the successes and progress to date, and then hone in on some of the challenges of bringing that to Asia.
Thank you, and it's great to be here with the panel today. It's interesting you're talking about a physical world and gold, and when people ask where are we getting our success from, we haven't gone directly down the entire digital issuance. Do we think digital is the future? 100%. Give it 5, 8 years. If you're not on the train, you're going to be under that train as it goes over the top of you, for a number of great reasons behind that as well. But where we're trying to work through now is how do you take the digitization of assets, and whilst they're not physical as in the gold, they are still stock, and people refer to them as physical. But it's, no one's running up and down Queen's Road anymore with certificates anymore. So, I think there's an understanding of how do we get from point A to point B. And really where Broadridge has found its success is helping that transition model across from what used to be a traditional process of 2 individual workflows, 2 traders trading, flowing through front office, middle office, back office, custody. It is how do you rewire that process, and how do you rewire that plumbing across the financial industry? So that's where we're really finding success in it. We haven't gone, as I say to people, to Web 3.0, we've taken the step to 2.0. And really that's given us an ability to try to navigate both the current processes and the new processes. And we see it really in 2 sides. So we're seeing a really good growth right now in what I call the internal DLT use cases, efficiency plays. And that's really how do we help a bank such as a HSBC mobilize some assets inside their particular legal entity structure, but be able to move that representation around their organization. So, we just spoke with stablecoins before, similarly to a stablecoin, but we're using a representation of an underlying stock certificate. Where it gets more interesting is where you go out into the street. Where is that trading and settlement? And that's really where the DLR platform is starting to accelerate. And I think, as John just said, there's definitely a lot more interest now of banks supporting a more market neutral platform that can have more connectivity, even playing field for people. And the DLT does require a network, and that network grows. Just to give you a numbers breakdown of where we were, we started the DLR about 2.5 years ago. For the first 2 years, it took us 2 years to hit $1 trillion of notional in a day. By the end of this year, we'll hit 2. So we've gone from 1 trillion in the first 2 years. I expect us to double that in 6 months. And with the number of banks we having coming on board, I think we'll see that start to accelerate further and further. From what are we bringing onto the platform? So right now, we've got 5 different trade types that we're focused on, because there are lots of different repo trade types. The first one is the intra-company, a New York against London office. We've now done our inter-company, so we've done inter-company intraday between Singapore and New York, and we're live with that. We've done it between the US and Europe, and we're live with that as well. And then a sponsored repo that we made an announcement about, I think, 2 weeks ago with UBS. We have another bank that's going live on that. Now, why are people doing these things? And I think that's where your question is, and there's really 3 reasons. The first one is a cost play. How do we take cost out of the current transactions that we're looking at? How do you mobilize your assets in one area and not have to pay the clearing and settlement fees? So, we see a lot of those original solutions we were bringing to market were very much around that cost efficiency. The second leg people are looking at is new revenue. How does a bank in Singapore or Hong Kong be able to put its money market out overnight internationally, get a better yield? And we actually have now some buy-side clients talking to bring that on. The third one, which I find probably the most interesting, is more around collateral optimization and risk. So we have a number of banks now, by adopting the practice and having an understanding with the regulator of where their asset is, being able to move their asset faster, having a joint workflow that's being driven by a smart contract between them and their counterparty, and also moving into a faster ability to swap your collateral in and out, actually gives the treasury teams greater control and a more robust process to be able to go back to regulators and have conversations with them as well. So one of our banks actually wants to go back to their regulator and essentially have a conversation once this is in place. Can we get some 10, 15 bips off our LCR, for example? Doesn't seem like a lot, but when you're a $300 or $400 billion bank, those little slivers really do help that bottom line. So we've seen great growth, good value for the customers, and we're really looking forward to expanding it again over the next 12 to 18 months.
Great. Great. Okay, fantastic. Thanks, Kurt. So this morning we were on a panel and we were talking about these broader financial markets initiatives, most of them being single sponsored by a network owner. And we were on this morning with the Hong Kong Exchange as an example. And then the customers or their customers connecting to those initiatives via API, using traditional rails, and sometimes existing UIs, right? So the customers hardly notice a difference. We've touched on a number of initiatives that are currently out there in the market. We've got debt new issuance, we've got equity secondary trading, and Hong Kong Exchange Synapse is an example of that. DLT repo for financing we've heard about, and we're working with Equilend on putting securities lending also on a blockchain. So there's plenty going on. These are all single sponsored projects, all on a chain. Now, we've got many stakeholders that we're dealing with here, but to actually have true vertical integration, all of those solutions are going to need to talk to each other. We're going to need to work across chains and then facilitate a conversation, obviously, between what's on chain and what remains off chain. And that's going to be particularly evident when we have cash on ledger and we can actually see a path to settling atomically. So my final question to the panelists is, what else is missing for that true vertical integration? Georgina.
Well, I think we touched on some of the areas, like how I think time is needed for having like traditional practices and processes. It would take time for them to adapt to the new technology. And in the meantime, I think what's important is to have interoperability across, new and existing, on-chain, off-chain, to really facilitate the sort of like adapting process. And also, for this to become of scale, I think like eventually when there are more platforms coming up, more new technologies, the interconnectivity between the two, which you touch on a bit just now, that it's one area that we definitely have to work on going forward.
Yeah,
John?
Absolutely. And Sharon, I think it's a really pertinent point at the moment, because I feel like 2023 is the year where a small number of banks, certainly including HSBC, have created digital asset platforms. But if you look at the size of those markets, the size of the debt market compared to the size of the digital debt market, obviously the vast majority is not digital. And people can look at the various platforms and think of them almost as digital islands. They're small platforms which are doing interesting things, but markets are all about liquidity. So the question is, as you said, Shane, is how do they link up? And as you said, Georgina, how do you drive that liquidity and that market development? So your Canton network is an excellent start for that. So we're part of that, as are many other banks and many other institutions. And that's driving technical interoperability. There's lots of other aspects which we need to sort out as an industry. There's risk interoperability. There's connecting different systems in different ways. And I think, Kurt, in your comments there, the way I've heard people summarize from your firm, summarize what you've said is mobility, right? It's about collateral mobility and moving assets. And as you said, I think illustrated very well, we can take existing assets and existing electronic forms, and we can move them better using techniques and products like yours. But what we can also do is create, as I said, natively digital assets, which just work in fundamentally different ways. And I think it's all about adoption pathways, because it's not the case that there's going to be some moment where the entire market moves to these approaches. What we need to make sure is we've got the on-ramps and the off-ramps, we've got the connectivity I've described, but then also, and you were touching on it, Shane, the facilitator, I think, to a large degree is money, digital money, because every transaction has a payment leg, everything's DVP, everything's delivery versus payment, and you can't transfer assets with legal certainty rapidly if you're not sure that you can pay for them rapidly with payment finality. And I think the CBDC conversation, some of the other digital money types, stablecoins and others were discussed, as that matures, as that gets real, we'll start to see those being used to support digital transactions. And certainly the way we've built our platforms is that our payment rails are ready for those when the central banks or the market in general is ready to use them as monetary types. So I think that's also an important missing piece which is coming into the picture.
Right, go ahead.
Look, I'd agree with that. It also, you've got to look at the standards. For banks to work and operate globally, locally, there needs to be a common understanding of standards. And you were just talking about the stable coins and CDBCs. So we still use SWIFT. We're only digitizing the collateral side on the DLR. And we use SWIFT for a couple of reasons. The bank knows how to consume SWIFT. The bank knows where it will go within its own platform, and there's a guarantee of delivery, all those things that you were touching on. We would do a stable coin tomorrow. In fact, we've got a trial coming up with Digital Asset and a couple of partners on a stable coin. But there's no point getting too far in front of the market. And I think we've got to let the technology catch up, and we've got to get the other stakeholders within the organization of a bank, which I spend a lot of my time talking to ops risk, finance risk. I've got a call tomorrow with the head of legal trying to understand what the legality of a digital asset is. And the real question is what happens. It's okay when things are going well. When you need to break glass, what actually happens? And it's getting some of those other stakeholders in some fairly significant institutions to understand that process of what is the legality of it, which documents are we keeping, which legal processes are we retaining, and how do we justify and guarantee provenance and ownership through that end state if you hit that break glass moment. Yeah. And I think that's the challenge.
And I think that's a great point to finish on. It is all about stakeholders and adoption, and not all of us. It's not flicking a switch. As stakeholders are going to get to that at different times, right? There are some that are more sophisticated than others. There are some that have a better understanding than others. There's some that have got the bandwidth for these projects more than others, right? And I think the solutions that are the ones that work the best are the ones that are incremental. We're showing incremental benefits, all understanding that this is going to take time. So I think with that, we'll finish. Thank you, panelists. Thank you all. And
all 7 of them.
See you here tomorrow, I think.
Thank you.
Okay, thank you.
Cheers.
Whoop. Thank you, Shane and John, for being on stage with us twice today, and obviously Georgina and Kurt for your insights. And as our panelists said, that's the end of today, Day 1 Hong Kong FinTech Week, redefining FinTech. We'll see you tomorrow at 9:30. We start with our content, and it's amazing. You want to see what's happening tomorrow. Remember, if you